And for your final listening pleasure, video number 3 of Saturday, this is the ECB, European Central Bank. However, it's interesting to see what the central banks do. They've been pumping up the Eurozone for so many months and years now. It's unbelievable. Quantitative easing, out of control, bond buying, it honestly looks worse than what we were doing, to be quite honest with you. So once again, I have Wolf Richter. The European Central Bank hands banks $250 billion today, floats all markets, just briefly. I thought, well, okay, what about it? So I read it. So I read this article. Oh, yeah. Okay. Definitely Jason Forworthy. Gusto for U.S. stocks and bonds dies down quickly. Thursday morning, 474 European banks grabbed. And I want you to think of the absurdity of this and say, how come nobody gives the people who are struggling, they were the ones who can't make the payments? Why aren't you giving us the effing money? You think we're just going to hoard it and not pay our bills? Give some people. You ever see someone win the lottery and then, I'm not paying that. I'll let them come repo the car. No. I'm paying the car off. I'm paying the van off. I'm paying the house off. And my dad, mom, you guys in the house? Sister, Andrea. Even though you aggravate me, Andrea, my sister. I'm paying your house off too. You know my other video I was talking about, if OJ Step 4 ever made it, what did I say? If I had, I'll pay my house off in 5 years if I, had massive YouTube, like a viral video YouTube channel. If my news stuff I talk about was like that important, I would pay my sister's house off. I'd pay my wife's house off. Her mom, her mother, my mother-in-law. My dad rents. My mom lives with my sister. Mom, Andrew, I'm paying off your house. Dad, Mom, I know you guys are separated, but when I get my next piece of property, there might be a little spot for a trailer or two. A little tiny single wide or something, nice looking, off into the cut, not trailer trash type stuff, nice little deal. And you want to talk about something you can get a good deal on too, with some of those used trailers that are like in the old person's parks, the over 55 parks. And then the what the hell is this, a spider web flying across my face? We sent mom over there, or grandpa, whatever. Okay, he's now in the nursing home, or he's dead, or whatever. We don't want to pay that monthly payment over there. We got to sell it. So you'll see these things in their 2 bedrooms, things like that, for just a few $1,000s. Come pick it up, a few $1,000. Give us $4 or $5 grand. We're out of here. Because they don't want to pay $500 a month in rental, fees and whatever fees to leave the thing there. Their grandpa's, Papa's dead now. Papa was a man who lived in the trailer park. And that's when you scoop in, take that thing. Dad, here you go. Mom, here you go. But you can't do that when you have a fraction of a fraction of a fraction of a piece of property, acreage, where your backyard is you walk outside, turn around, walk back inside, front yard, walk outside, take a couple steps. Oh, I got a few steps, back inside. You have no property. You need at least a half acre, 2 acres. Between a half acre to 2 acres. Half acres might be a little short for bringing mom and pop on the property. But that's where my mindset is. Give me a bunch of extra money. Give me some stuff. That's what I'm doing with it. I got my silver. Yes, I'm honestly probably going to buy a little bit more as the days go on. Until I see a giant spike in silver, I'll just keep plugging away just a little bit extra, like I do. And if I see this $4, $5 day move like Webbot said is coming, when I see that day happen, I'm going to make one final quick purchase and ride that horse. But the reason I'm telling you this is because I'm telling you what I would do with money like that. I'll take the burden off my dad, take the burden off my mom and my sister, who my mom's living with. You guys are making the payment. She's not even freaking paying you rent there with her horrible part-time hours. Your mom, Evelyn, she's busting her butt at 2 different jobs. I'll pay her damn house off. How about that? How do you like me now? So banks, central banks, give me the money. Give me some freaking free money. I'll lessen the burden. And those people will then be able to keep car payments. They might go buy a new car. They may stimulate the economy. But no, what we get is the banks only get the money. You get nothing. We'll lend it to you. No, how about you give it to me and then I'll go buy a car myself. I'll pay off some debt to those same banks that you're going to give the money to anyways. But instead, they get the money for free. Money ain't for nothing and the chicks for free. I came in, I had to go there. Instead, they get the money and you still owe them, so they're going to come for you too. It's got to be, boy, what was I saying? If you ever want to rob a bank, just go own one. It's just as good, right? Anyways, I'm already aggravated before even getting started on this article. ECB hands the banks, and again, that's the European side, $250 billion today. Thursday morning, 474 European banks grabbed with greater than expected gusto 233 euros, billion, or 251 billion US dollars, if you will, in totally free and possibly even better money that the ECB held out to them within its longer-term refinancing operation, or LTRO, one of the special programs with which it douses the markets with liquidity to perform miracles. The amount that banks took today was more than double than what had been expected. This money is a 4-year loan from the ECB that carries a whopping 0% free money interest rate. If certain lending growth targets are met, because this money is supposed to be lent out, they said, the interest rates can become negative and drop as low as minus 0.4. So in other words, under these conditions, the ECB would actually pay the banks to take this money and lend it out. We'll give you 0.4% to lend it out. Again, why don't you just give it to the people? Let them spend it. You will stimulate the economy like you've never seen. What happens when a person, average person, whether they're poor or not means nothing, gets a nice lump sum of money? What's the first thing that they can't contain themselves from doing? I've got to go buy something. I need that freaking TV for so long. I'm going to get it. My damn car, I'm tired of fixing. I'm getting a car. Quadcopter, I'm getting a quadcopter. That's what people do. Things we may not even need. We spend. That's how you stimulate the economy. And not only that, I've got credit card debt. When I talk to Frank at lunch, we talk about some of the times he's like, yeah, I got a couple, cards I'd like to pay down, that kind of thing. And we talk about that all the time. That's where his mindset is. He's an average person. That's where my mindset is. Yeah, I'll pay off my wife's credit card, which it already is. I'd pay off my credit card, which it actually is as of today. I owed $568 or $9 on it. Paid that turd off today. What bill do I have? Wife's van, rent, done. Unless you count the absurdly high cable bill. Bullcrap. Anyways, investors expected banks to plow this money into the stock and bond markets. And so they tried to front run the banks in anticipation of this miracle. And stocks and bonds duly jumped, first in Europe and then in the US. How can you not party when banks get this kind of free moolah that they have something that they have to do something with, right? They got to lend it out. Oh, we got to do something with the money. Put it in the market, right? It was the fourth and final LTRO allotment of the series that was announced in March last year and has been running in parallel with the ECB's quantitative easing. So they're giving banks tons of money and they're easing. Wow. Which we already knew. Today's operation brought gross amounts of to 739 billion euros, of which 329 billion euros had been rolled over from a program dating from the euro debt crisis. So where are the banks going to put this money? That's what everybody wants to know. The instant knee-jerk reaction, stocks and bonds. And that's where speculators dash to. The German DAX rose 1.1%, French CAC 40 up almost 1%, and some other ones, whatever. The Italian MIB jumped 1.1% and is up 28% from the recent low back in June. Italian, you know that Italian? Yeah, he says here, this is the same Italy whose banks are spiraling even deeper into banking crisis? Yeah. The Portuguese PSI 20 rose over 1%. But alas, it's barely up from the lowly bottom of its range. Speculators have also dove into Eurozone government bonds, and prices rose and yields fell early on. But then someone turned off the money spigot, and bonds reversed course. Prices headed south, and yields rose again at the end of the day. That was fast. That became the song and dance in the U.S., where stocks jumped in morning trading. The Dow was up over 100 points by 1 p.m., only at the end of the day it was down in the red again for the sixth day in a row, he says. S&P 500 and the NASDAQ followed a similar trajectory into the red. And Treasuries, too, reversed course during the day. At first, the 10-year yield fell as low as 2.39%, but then prices lost their footing and the yield rose to 2.42%, the first increase in a week. The finger pointing has started to explain the failed rally. Many commentators blame the struggles of the Republican leadership in Congress that can't get their Republican ducks all lined up in a row to agree on and pass a healthcare bill or any other wonders that Wall Street has been hyping relentlessly as the greatest boon to stocks since sliced bread. And now markets teetering up there in the stratosphere are getting impatient and are drumming with their fingers on the sell button. But it could just be that the money from the ECB, which flows globally in all directions, as money does, simply wasn't enough to accomplish much these days in an era when investors, after years of zero interest rate policy, negative interest rate policy, QE, QQE, and other programs such as the LTRO have become inured to central bank machinations, and that these machinations have lost their power to inflate the already inflated markets further, and that other issues are wriggling unpleasantly into the foreground. Turns out the S&P 500 companies blew $1.7 trillion over the past 3 years on making earnings per share appear less bad. But they still look terrible. And I want to see if I can find this real quick on Zero Hedge, because it wasn't enough to do a video on it. It was extremely. It was like I would have been done in like 30 seconds. Here's an interesting article from Zero Hedge, by the way. Trump on what happens next. Obamacare will explode. It says that, I'm going to find it. It said something like, "Don't look at this chart," or "Don't show so and so this chart," something like that. Hang on. Come on. Maybe I should pause the video. Yeah, I was just going to say, as soon as I say that, I'm going to have to not, I'll find it. So, and here it is. Let me pull this up. Let me zoom in, see if I can make that a little bit bigger. There we go. Zoom in. Here you go. Don't show this chart. What was the title of the whatever? So we have durable good orders in the S&P 500. Look at this green line. This is the S&P 500. Durable good orders. You can see they pretty much follow each other around, right? They always come back into equilibrium. You can see that clearly. And I don't know, and this is 1997 to 2017. We're talking 20 years. Do you see in that 20-year period on this chart anything even close to this gap? Even kind of. Even maybe. Yes or no? Well, we have it. No. Oh, this is the biggest we got here, and that's nothing. This is today's price. Again, S&P's up here. The market is so overvalued. I almost feel like I don't even know how we could even get to September, October, when I really expect the fireworks to start anyways. I kind of might be leaning towards the other guy I keep telling you about. Says look out for May 11th. It's a big day. Watch March 13th for any signs that we're going down financially, markets. But don't even harbor on that. It's not a big deal. May 11th is. And if we see something there, we really need to look at May 11th. Did I not just tell you we've had 6 days in a row down? March 13th, 14th, 15th, 16th. And again, Monday through Friday is the markets. The sign was there. So by May 11th, what are we going to see? Or on May 11th, or around that time frame? I'm not coming here trying to make a prediction because I don't have some kind of special thing that I found that I want to make the prediction. But I've already said this about 3 or 4 times. I'll say it again. I do feel like this September, October might be the go time one. It really might be. 923 in the movies, 923. Which 923? 2015, 2016, 2017, 2018. It could be 2018. Maybe they'll pull this thing all the way across into 2018 and keep going. I thought about that. They could. I mean, just put more debt. The ECB, another $500 billion. Here you go, no problem. But that article just said it had almost no effect now all of a sudden. Here it is, up, back normal. Never mind. Whoa. With that much money thrown at it, that's what just happened? Whoa. So we also have 2018 being the Economist magazine 30 years ago thing. So I could almost see end of this 2017, September, October, etc. Oh my gosh, markets, problem. Leads into 2018, and it keeps going down. Oh my gosh, this is horrible. We got to get together as countries. We got to come up with the currency so we can't devalue against each other, make trade fair. The whole debt system's imploding. We got to work together. Oh, and that Phoenix rises from the ashes of paper dollars, like on that magazine cover, with a big giant gold around its neck. But I did notice the little circle with the little line through it, almost like it was a digital coin. What does a 0 with a line through it on a gold coin mean? Were they trying to tell us something? Oh, you guys like Bitcoin, huh? Yeah, that's us. We set that up a long time ago. Could it be? I don't know, but I do know one thing for sure. Banks are getting into their own cryptocurrency space, for sure. All by chance, starting late last year and this year, I'm hearing more about it for the banks. And 2018 happens to be 1 year away. Interesting timing, I'll just say that. But neither here nor there. I think at the end of this year, it's really going to start getting, it's going to start. I just feel it in my bones. I could be wrong. I could certainly be wrong. These people have pulled out rabbits out of their hat over and over again. They're pulling one out right now. Don't need to go back to that chart, S&P. Obamacare, they pulled the bill. They're not going to vote. Markets rally. Never mind, they don't. They go back again. Yeah, kind of. No, never mind. What the hell's going on? I do know one thing. Webbot said this time, right now, this time frame, there's going to be all kinds of stuff like this going on. So I'm not surprised at all that they couldn't get the vote passed. Now we got to get into the tax thing. They said we got to do the taxes, the corporate taxes. Let's get that down. Well, excuse me, Jason at 4 in the background. Sir, ma'am, Miss Pelosi, you moron. When do we talk about the debt ceiling? Because I think that should be next on the plate, to be honest with you, not the tax thing. Or maybe you want to combine them? Haven't heard anyone talk about it. Do you guys want to maybe have a little chat? That's kind of more important than anything else right now about kicking that can down a little further. Very interesting times. Take care.